I'm Catherine Ross, and I'm here on the floor of the NYSE with Jim Cramer. Jim, let's kick this off by talking about what's on the top of your mind.
Well, it's Salesforce. Very exciting. Got to talk to Marc Benioff and his belief that business is the greatest force for social change, a great platform. And the reason I mentioned that at the top of mind is because I watched a Democratic debate last night, and they all seem to be vying on who can be the most negative on capitalism. And Marc is saying, listen, capitalism is dead and it's got to be changed. And so this overall ethos cannot be dismissed when you're picking stocks anymore. It can. Now, look, I am not saying, and of course we have our conference call today, 11:45. I am not saying that you can't own stocks. I am saying beware. And one of my 7 deadly sins that I'm going to talk about at our conference call for Action Alerts Club members is the notion you better start realizing who your co-shareholders are, because they may believe in what Elizabeth Warren believes in and Bernie Sanders believes in. We don't know. They certainly believe in certain millennial ethos. I continue to believe that Elizabeth is someone who can be persuaded to take stands that are not as acerbic, but Marc is the antidote to what I heard last night. So people should read Trailblazer and recognize that the doom and gloom over the Democrats is unnecessarily negative versus the idea of buying good stocks here.
Our real money stock of the day today is Bank of America after its earnings beat.
What a quarter. Now look, we own Goldman, went up. We own Citi, up big. We own JP Morgan, up big. Can't own all of them. Another thing I'm going to talk about on my conference call. But when I speak to the management at Bank of America, what's really clear is it's the technical. It's the bank with the best technology, whether it be their voice recognition, which they're well ahead of everybody else, whether it be the way that their checking services work, the number of people who check in. And what's really important is when you hear the numbers, but you realize it's totally not millennial. It's everybody who has this. And so what Brian recognized is everybody has one of these, and because they have one, your number, getting my team and heading down. Because people have one, I got the new phone last night, that's why I'm kind of fascinated by it. Then what you realize is everybody wants to bank with this. So stop thinking it's a millennial. That's completely wrong. We're a Bank of America client. It's an easy app. It's terrific. My wife loves it.
Before we go, JP Morgan, I know you're going to talk about them more on your conference call, but I got to ask, do you think that because of these surprising earnings beats that these big banks are putting the recession bells to rest for now?
Well, but I think there's an overall move, and look, I have to tell you, Catherine, it feels like a rotation, not a fundamental change, a foundational change. But people like low multiple stocks right now, and Bank of America selling it like 9-10 times earnings, JP Morgan selling it 11, 12 times earnings. People want those kinds of stocks. Their growth is amazing. And I really believe that what's happened now when you see what's going on with Salesforce stock, with Workday stock, with ServiceNow stock, with Adobe stock, you recognize that people are fleeing from growth. Now, the one thing I would point out is the analysts are just now downgrading. These stocks have been going down for a long time, so I'm going to switch directions soon and recommend that people take a hard look, not at Adobe, because I think that Salesforce is really taking it to Adobe, the last acquisition. I think that Shantanu Narayan has a fantastic company, but I always felt that he had no competition, but his last acquisition is directly in competition with Salesforce. That's tough to do. I was surprised at Workday. They talked about human capital management. A lot of people felt they were slowing. Catherine, I don't believe that. I just don't believe it for the world. And then I do believe that the cutting edge of J&J. Like, is J&J low multiple or high multiple? And the answer there is litigation. And the fact that there's $400 million being spent to find new plaintiffs. Thank you, J&J, for giving us that figure. And it's a multi-billion-dollar business, and yet J&J's come out on top. And that's in part because it's low multiple, but and also because they said they have no fear.
All right, Jim, thank you so much for joining us.
Hey, I should remind people that tomorrow is Bull Market Fantasy.
Tomorrow is Bull Market Fantasy over on bullmarketfantasy.com around 10:45 a.m.
And a lot of people are talking about it. I'm sorry I missed. I was in Mexico. I was in Puebla on my wife's business. And sorry I missed the show. I try not to. I remember, just to be really clear, because I play with an open hand always, I signed up to do Bull Market Fantasy after I had made my schedule. My schedule is made at the end of 2018. So it's etched in stone, but don't worry, I ain't going anywhere now. And if I do, I will do bull market from there.
All right, Jim, thanks for joining. And of course, guys, you got to head on over to actionalertsplus.com. This is a key conference call to listen in and watch because it's earnings season.
Because I haven't written the top yet. I've written the 7 deadly sins of investing, but I will write the top because I believe in being current for our club members.
All right, you can find that over on actionalertsplus.com. I'm Catherine Ross, and we'll see you tomorrow.